Hello, everyone. Can you guys hear me? Am I audible?
Yes.
Hello, can you guys hear me?
Yes, we can.
Okay, perfect. So, welcome to all of you. We are going to start with the second day of webinar, but unfortunately, there was a change yesterday which I made because I was expecting. Initially, I decided to. I mean, what I announced was that we will be having first day. We will do the recap, and on second day we will do question number one. But then I realized that doing question is more important rather than doing a recap. So we did one question yesterday. I have already provided the recording to the respective institutes. Probably you will get in a day or two. And today, and then the students requested to have a. I mean, my idea was to do section B question today, but students insisted that we should go for a recap. So in today's session, we are not going to do the complete entire recap of the entire syllabus of APM, but I will try my level best to cover as many topics as I can. Right. So first of all, do you have? I mean, I'm not sure because I cannot see you guys. I have another screen. So can you comment on if someone was also in the yesterday's session? So any comment from yesterday's session, anything specific you would like to me to cover, or shall we start with the recap?
We can start.
Okay. So
Sorry, Zai.
sorry.
I've got a question. Is there any more of these webinars that are happening before the exam?
There was 2-day webinar, right? One session I conducted. Sorry, I conducted one section yesterday, and today is the second session. So I'm afraid no.
Okay.
But I will share recording with you, so that you can see. Are you a regular student? No.
I am on the WhatsApp group.
Okay, WhatsApp. Okay, perfect. So I will upload it on my YouTube channel, and I think KKDL and ASA both will upload it in their respective YouTube channel as well. So you can have a look at the video what we did in yesterday's session, right? Okay, so we are going to start with the first section of performance measurement, because in the last session, yesterday, what we did was actually related to what are the key components which we should look at whenever we are trying to evaluate a performance measurement report. So we are not going to do it today because we already did it yesterday. So what we are going to today is we are going to start with performance management, performance measurement, and we are going to do few things which generally students skip, like what is the drawback of sole reliance on financial performance. So if someone is saying, let's suppose yes, examiner gave you a report in appendix number 1, and you are seeing that only financial indicators are there, or let's suppose there is a report which management is complaining, shareholder is complaining that look, your financial report is solely financial report. I mean, there is no non-financial indicator is available. So, and someone is asking you to evaluate why financial performance indicators should be represented along with non-financial indicators. So this is basically the answer, that why only reliance on financial performance indicator doesn't make any sense, because it is mainly short-term. Main issue with only financial indicator is that is backward looking. This is the first problem, because whatever happened, you are just reporting it. It is not going to represent what company may, what can happen with company in future. Like for example, and this is something which is measured by balance scorecard, that your apart from financial, customer perspective, internal perspective, quality, innovation, there are so many things which are important apart from financial perspective. So the first important point is it's backward looking. Then obviously it's a short termism. Short termism in the sense that if you are not using economic value added, apart from economic value added, and mostly performance measurement indicators are short term. Like return on capital employed is purely based on last year profit, right? So if you are using return on capital employed as a basis, then your manager will try to focus only on indicators which are going to improve your short-term profits, right? So generally gross profit, operating profit. So generally, it's not a good idea to measure the performance of the company by using such indicators. I mean, you should look at the longer term perspective, right? So it generally represents short-term perspective. And obviously it do not convey the whole picture. For example, if the company is growing, it has started improving in terms of quality, it will reflect later in your financial statement. And somehow manipulation of results are sometimes easier, not exactly manipulation, but you can say window dressing. Let's suppose if I'm saying that, okay, fine, instead of buying a machinery, I just took it on rental. So I'm using that machinery, I'm getting the benefit, but I'm not including it in my capital employed. So it's not exactly the manipulation, but you are trying to, get some benefit from. You are just trying to get benefits from the financial ratio. So that's basically the four things. But again, whatever is given in the question, you have to connect it with the scenario. If something like this is given in the question, you have to connect it with the scenario. As I said in the last lecture, that you cannot just write these things. You have to connect it with the scenario. So these are broadly, these are three performance model which are given in APM paper and in F5 also. I think F5 doesn't include performance pyramid, right? So what is the benefit of using balance card? Because we know what is balance scorecard. Balance scorecard has four different dimensions. The first one is financial perspective. Right, let me try to write it if I can. I'm not using my pen in today's session, so I need to type here, right? I hope I can do that. Yeah. So there is financial perspective, there is customer perspective, there is internal business perspective, and there is learning and innovation. Just a quick question. How can you connect internal business perspective with customer perspective? How can we connect these two things? Any idea? Let's suppose if CEO has asked you to, CEO is confused between the relation between these four dimensions, and CEO is asking you to explain how these four perspectives are connected with each other. Can we
Could it be that we can link it in a way that we look at how our internal processes are fulfilling the customer needs and the demands, and whether we're flexible enough to meet, or our processes and our systems are flexible enough to meet customer demands?
Yes, yes. So basically, learning and innovation and business perspective both are your internal dimensions. Like we are trying to improve our processes. We are trying to, let's suppose if we are in a call center service, we are trying to train our labor, our call center service people. We are trying to improve our processes. That will come in under internal business perspective. We are trying to innovate. We are trying to introduce new services. That is our efforts, and that is learning and innovation. Now, if our whatever steps we are taking are enough to satisfy the customer, then customer perspective will be positive. I mean, maybe the company is trying its level best to do maximum for the customer, but it's not up to the par. So customer feedback will still be not good. So customer perspective will be low in that case, but internal business perspective, internal business perspective, you are trying your level best to meet the expectation. So Internal business process is purely internal, and learning and innovation both are your under your control. You can control it, right? Customer perspective, you cannot control it. That is some sort of result that what you are getting, if they are satisfied or not, and that is from the lens of customer. Internal business perspective is from the lens of what the management is trying to do, right? And financial perspective is actually result of everything, like whatever, I mean, you are innovating, you are improving your processes. If that is improving the customer satisfaction, ultimately your financial perspective will improve. So that's basically how these four things are connected. So what is the benefit is quite simple: financial, mix of financial and non-financial indicators. What gets measured get done. This is something which I will try which I will try to explain it in detail in the next few slides. But the idea is simple. Whatever you are measuring is get done. I mean, generally people do that. Okay. And tempering is generally difficult because there are so many indicators which you are using in order to analyze the performance. So if you are trying to do some creative accounting, maybe some other indicator can capture the issue. And this can be linked with mission statement. Now, this is quite important because this is something which we generally do in question number one. In question number one, generally the what how examiner examine is examiner give you a mission statement and the objective or mission statement, and then you are supposed to identify whether KPIs are in line with the mission statement. So if you are doing well in terms of if your KPIs are well defined, well connected with the mission statements, achievement of KPI will ultimately lead to the mission, the overall meeting the overall objective of the company. Now, what can be the problem? This can, I mean, 8 to 10 marks that what can be the problems, or can you identify any problems related to the balance scorecard? So the first and the most important, if you are selling, no, okay. Let's suppose you are selling toothpaste or you are selling soap. Can you identify customer feedback? Obviously, it's extremely difficult. So capturing the data processing, generally it's an issue.
We keep losing
Information. Hello.
You're cutting out.
Am I not audible?
A couple of times you've cut out.
Is this with you or is this with everyone?
It's with everyone.
Okay. Then let me try to connect with another device probably. Just a second. Okay, let me just a second. Just a second. Is this better now?
Yeah.
Okay. So information overload can be an issue. Information overload in the sense you sometimes if you see the information, see the performance measurement report, somehow people try to capture the information and they identify so many KPIs, multiple KPIs. Like let's suppose you are trying to evaluate whether the company is able to maximize shareholder returns, and you have identified 4 or 5 KPIs like dividend per share, EPS, or maybe return on capital employed and economic value added. No, it's not going to serve the purpose because you have identified so many things. So that can be the problem. Conflict between the measures, not exactly conflict between the measures, it's actually conflict between the stakeholders. Like for example, if an employee wants if you want to retain the employee, if you want to improve the employee satisfaction or maybe quality, you have to spend more money. So that can be an important part here. Lack of commitment by senior management, this is extremely important in all type of situation. Like if you are using activity based management, if you are using value based management, if you are using balanced scorecard approach, if you are using deep business process reengineering, if you are using probably benchmarking, if you are using any technique, this can you can fit this part everywhere. That lack of sorry, I mean commitment from the senior management is the most important thing, because if this is not there, you won't be able to get, I mean if you are not getting the uh, favor of your manager, if you're not getting enough support, then obviously you cannot, or you won't be able to work out whatever you are trying to do. So this is something which you can fit in every, which you can fit anywhere. Poor communication, this is mostly a very generic sort of problem, not specifically with the balance scorecard. That if your communication is not good, if you are unable to communicate your KPIs to the relevant stakeholders, then probably they will not be able to know what the company is expecting from them, and ultimately that will not serve the purpose. Time and cost involved, this is just a simple additional
Ma'am, your voice is lagging again.
um okay, fine. Let me try to rejoin the meeting. I hope I can. Just allow me 2 to 3 minutes. Hello, can you guys hear me now?
Yes, ma'am.
Yes.
Okay.
Yes.
Uh, okay. All right. So can you guys hear me now?
Yes, we can hear you.
Hello?
We can hear you.
Yes, we
Hello?
can.
Yes, I can hear you.
Okay. So, uh, sorry. So these are few things which are actually related to the problems of balance scorecard. And to be very honest, you can fit these issues with the other models. Like if you are talking about building block model, you can also fit most of the problematic part, which are the part of balance scorecard there as well. So now, what is the concept of building block model? It's quite simple. The idea is quite simple. The criticism was basically that when you are using a balance scorecard, the problem with balance scorecard is that if you don't have a good reward scheme, if you don't have a good KPI system, then probably you won't be able to have you cannot meet the objective, or you cannot have the desired outcome. So Kaplan and Norton, so Fitzgerald and Moon have actually identified two new indicators, two new areas, and these areas are extremely important because there are so many times when examiner asks you about the reward system and the standard and reward system. I think it has been examined 3 to 4 times in past, where examiner give you a basic idea, basic reward system and identify or ask you to evaluate the reward system. So the most important thing is that you should first of all, what you have to see is that the standard part. Whatever standard you are making, let's suppose you are saying that 90% delivery should be on time, or for example you are saying that what others are, let's suppose you are saying that mm, in terms of doctors, let's suppose you are saying or for example, let's suppose you are talking about sales. So you are saying that you have to increase the sales volume by at least 20%, right? So who is setting the standard? If the people who are involved in the business are actually setting the standard, for example, I am from the sales department, I am the manager of sales department. So technically, I should be involved in the process. If I'm not involved in the process, probably I won't take the ownership. So if you are seeing that someone else is preparing the budget, and the person who is involved who's supposed to meet the budget is not the part of budget preparation process or development of the standard, that means ultimately your performance measurement system will not work, right? Standards should be achievable. Whatever standards you are making, that should be achievable. Whatever standards you are making should be fair enough. Fair in the sense that it's not equal, it's fair. Fair in the sense, let's suppose we are talking about different cities. Let's suppose we are talking about Karachi and Mumbai city. Let's suppose, I'm not sure about if I'm giving a correct example. Let's suppose we are talking about Mumbai and there's another city in India which is less populated, right? So obviously, delivery time of Mumbai will be higher because of high traffic issues in Mumbai. Maybe I'm wrong, but this is my observation. And maybe some other city has a lower delivery time because they are having less traffic congestion. So delivery time should be made accordingly, like Uber, like in Food Panda, we have a Food Panda service. So they technically identify the traffic and then they identify how much time it will take to deliver you. So that's extremely important to have a fair standard, not same standard. In book, I think it's written equality of a standard. It's not equality of standard, it's fairness of standard, right? And obviously, whatever the reward is, that should motivate the employee, that should be controllable by the employee, and that should be based on controllable factors that should motivate employee. And am I repeating this? Motivates the employee. It should be based on controllable factor. And there's one more thing. I'm not. I'm unable to recall that. Anyways, let's. I will discuss it later. So and if you if you have these things intact, then obviously you will ultimately able to work on these. And these are these 6 dimensions. In 6 dimensions, these 4 are something which you are supposed to do at your end, which is the part of building in balance scorecard. That was internal business process and learning and innovation. And if you do this, if you improve this, then ultimately you will have customer satisfaction and your financial ratios will improve, right? So ultimately, it's like this balance scorecard. Apart from the only difference is that here we have standards and reward system. Okay, so performance pyramid is the last performance indicator, performance measurement model which we have in our APM paper. I mean, it I mean, frequency of examining this topic is not so high, but it may come in 25 marks attempt, right? So ultimately, how this is connected with tactical, strategic, and operational level. Like if you have, if in exam, someone examiner gave you a mission statement, so that is something which is a corporate mission. And corporate mission is divided into 2 parts. The first part is the customer perspective, right, where the market is seeing how competitive you are, and the second one is financial. Both are not under the control of manager. Both are results, right? And how you can manage your market? We can manage our market by improving our customer satisfaction and by improving our external flexibility. Flexibility is in both parts. This part is related to external flexibility. External flexibility means that how quickly you can respond to the requirements of the customer. Let's suppose customer is asking you to have a service of online payment, and if you are allowing them within a month or maybe 2 months, that means you are quick in that. Then how you can improve the financial performance? Financial performance can be improved by improving the output of the company, which is the productivity part, and with respect to internal flexibility. Internal flexibility is multi-scaling of resources mainly, right? And how you can improve the customer satisfaction? Customer satisfaction can be improved through quality. Customer satisfaction can be improved through delivery of services. And how can you improve the productivity? It can be improved by reducing the processing time, I mean cycle time, and it can improve by reducing the wastage, right? So what KPIs you are if you are talking about KPIs, KPIs are translate from higher management to the lower management. And if you are meeting the object target, then it's moving from lower side to the upper side. So if you are good here, good in this part, you will ultimately improve in this part. If you are good here, you will improve this. And if you are good here, then obviously you will be able to meet the objective. So that's basically performance pyramid. In this part is actually related to the external effectiveness, something which is mostly related with the external perspective. And this is the internal part of the company. This is basically the internal efficiency, right? Okay. So after that, there is another concept of performance prism. This is now this is some sort of a gray area because it has not been included or excluded from. Initially, it was in APM, but right now, currently, I have not seen it with a lot. So we will generally have an overview of this. So it says that the first and most important thing for you is to identify the relevant stakeholder. Relevant stakeholder for this, there is a there is a stakeholder mapping where we identify that whether stakeholders are powerful, whether stakeholders are interested. We will do it later. So from there, we identify who is the major stakeholder to whom we should keep in mind while preparing the strategy, right? So whoever the its major stakeholder is, whether it's a customer, whether it's a shareholder, whether they are employees, whoever is the stakeholder, you are supposed to prepare a strategy. So you have to prepare a strategy to satisfy that stakeholder because those are the important stakeholder. You have to analyze the processes, how you are going to do that. You have to identify the resources which you have. Process and resources are a bit different, but both comes under your strength. And ultimately, if you improve your processes, if you are giving them the outcome, then definitely you also expect some contribution from their side. Contribution in the sense, if you are talking about shareholder, if you are improving the returns of shareholder, then definitely you want them to invest in your company. If you're talking about customer, you want them to buy your product, be loyal with the company. Same with employees. So this is a very simple theory, but not extremely important. But this is something which you should remember whenever you are trying to attempt APM paper. Critical success factor, this is something which we already know. What is critical success factor? Now, this is something which has been asked in, I think there was a question, film company. I think in early 2000, 2011 to 2013, there was a question, film company, where examiner examined this internal critical success factor and external critical factor. So internal critical factor is anything which is within the control of manager. So whatever you can control, that comes under internal critical success factor, and that should be monitored, right? External critical success factor is something which is important to your company, but which you cannot control, like the interest rate, like the prices, like, for example, government initiatives, government interventions, whatever the government is doing. So they are critical to your success. For example, for banking industry, interest rate is quite critical, but you cannot control them. So if you cannot control them, you have to adjust your policies in order to take care of that. If they are controllable, you have to work for it. If they are uncontrollable, you have to adjust your policies accordingly. Monitoring and building critical success factor. Monitoring is something which is you are already doing something. Like you are doing something and you're just trying to monitor whether you are doing it correctly or incorrectly. Building critical success factor is something which will improve, which is going to be build some long-term thing like research. Some, like, suppose if you're talking about a reward system, that whether the company is able to have that reward, in that case it will come under the building critical success factor. Are you all there? I'm not sure.
Yes, ma'am.
Yes.
Okay, so the non-financial performance indicator. Non-financial performance indicator is something which is quite frequent in APM paper. It can be a complete 25 marks question in section B, or it can be something which is in section A along with some other governmental issues, right? So performance measurement in not-for-profit making organization. Obviously, we know what is not-for-profit making organization. An organization whose objective is not a profit making, right? Now, what is the problem with not-for-profit making organization? The non-quantifiable cost and benefit. There are a lot of things which you cannot quantify. This is something which is there. Like, let's suppose we are talking about the patients. We are talking about so many charities. There are a lot of things which you cannot quantify. And the most important problem is that the funds are not available. I mean, if you're talking about a non-for-profit, if you're talking about an organization who's not performing well, the problem is that they don't have enough funds available. They have multiple and diverse objectives. For example, the objective of taxpayer, the objective of government, the objective of any other authorities. That is actually the problem. And obviously, there is an impact of politics on the performance measurement. This is something which comes under the ethics part and skepticism part, that why the government is trying to change the policy of hospital, why the government is trying to intervene, what is the basic objective? Is this a good objective or is it a bad objective? Okay, so 3 E's: economy, efficiency, and effectiveness. So this is something which, on the basis of which we generally analyze the performance of profit-making and not-for-profit making organization. I hope you guys know what is economy, efficiency, and effectiveness. Economy is simply how expensive your resources are, whether you are using expensive resources in order to get the output, I mean, cost per employee can be this thing, cost per square meter. Cost is related to generally with economy, right? Efficiency is how you are utilizing your resources, mainly resource utilization, how much output you are getting from your inputs, right? So that is mainly the resource utilization. Effectiveness is mainly the overall objective of the organization. So if the objective of the organization is to provide shelter to the needy people, then how much how any target which is going to measure that, let's suppose the occupancy rate of your house, or maybe if you're talking about an ambulance, your target is to transport patients within a specific time, then how many times you have transport is I think not a good word. How much time you are taking to, let's use this word right now, how much time you are taking to transport a patient from to the hospital, like your time is 20 to 30 minutes, so how much time you are taking, so that can be something which comes under the concept of effectiveness. So whatever the objective is, let's suppose you're talking about a school, a university, then how many graduates you are producing, how many something related to the success of graduates will come under this heading, right? Responsibility center is something which is quite simple. Responsibility center is, there are three responsibility centers: cost center, profit center, and investment center. Meanwhile, I'm just trying to have a sip of water. Can you please differentiate between profit center and investment center? Anyone?
Profit centers generate revenue, but they don't have the power to make investment decisions, and investment center has the power to make investment decisions.
Cost center is any division of the organization where we are just generating costs. For example, production department, IT department, research and development. These departments are just generating costs. Profit center is any division or part of the organization which is generating profit. Like it can be your, for example, it can be your division or a branch, or maybe let's suppose we are talking about a multinational company which is operating in Pakistan, India, Bangladesh, Nepal, or maybe some other country. So Pakistan can be treated as a profit center, right? So profit center is any part from where you are generating the profit, right? So let's suppose if we are talking about Pakistan, let's suppose we are talking about Karachi, right? In Karachi, we have a factory inside area. Uh, uh, we have sales office in let's suppose in a commercial area, right? So the factory will be classified as a cost center. The sales department, which sales office, which is in the commercial area, will be classified as revenue center. But Karachi division will be classified as a profit center, right? And the difference between profit center and investment center is simply, profit center is where your manager is responsible for profits only. He is not supposed to deal with the investment part. But if investment is allowed, if he is responsible for investment also, then the division will be classified as an investment center, not the profit center. So if it's an investment center, the performance is based on return in any ratio which includes profit and capital both, like return on capital employed, like residual income, like asset turnover ratio. If you are dealing with a profit center, then any ratio which is dealing with the income statement only, like GP, like operating profit, like sales growth, something which is related to the P&L. Okay, so and this is something controllable and traceable, controllable, and I'm not going to discuss this in today's session, but anything which is which is controllable by the manager should be used for his performance measurement, right? So I'm just skipping this part because it's not extremely important. Okay, fine. So we are moving towards economic value added. This is something which we have used so many times in our performance measurement questions, right? So what is economic value added? Economic value added is actually a concept where we say no to accounting policies. We are actually trying to, adjust accounting policies in order to analyze performance in a better way, right? So how we start is we start from operating profit after tax. We can also start from operating profit before tax. It's completely up to you. Uh, it's up to you how you are starting. There's this one adjustment which is required. So I'm not going to deal with that right now. So we are going to start with operating profit. Then we have to add accounting depreciation. Why we are adding accounting depreciation? Because we believe that a depreciation merely represents my analysis of how the asset is going to depreciate. So we are not going to use accounting depreciation. Instead, we are going to use this economic depreciation. So there's a purpose behind these colorful figures, colorful theme, because instead of accounting depreciation, we use economic depreciation, right? So we'll add back accounting depreciation because we don't believe in that, and we deduct the economic depreciation. Do you guys have any idea about economic depreciation? What is economic depreciation? Okay. Economic depreciation actually means that the real decrease in the value of the asset, that is actually the economic depreciation, right? So then operating lease charges, if something has been classified as operating lease, we will, I mean, if you're using any asset and you are classifying and you are just paying rentals for that, then we believe that you should not do that because you are taking the benefit. So let's suppose if accounting standards are is not allowing you to capitalize it for accounting purposes, we say no, you have to capitalize it because you are taking the benefit. So if you are taking the benefits, the cost of asset should come in the capital. So uh, uh, we add back accounting lease charges, which is mainly the rental one, and we deduct depreciation of the asset, because now this is the part of the company. We deduct the depreciation of finance lease. And when I'm saying depreciation, I actually means economic depreciation. Try to do archive question, ARKAIG, archive question. That is an extremely good example of this. And then advertisement expenditure. If you are doing any advertisement which will bring a long term benefit to the organization, let's suppose we will spend $2 million dollars in the investment, or maybe $1 million in advertisement, and we are expecting that the benefit will come in coming 2 years, then obviously the advertisement expenditure should be charged for the coming 2 years, not in this year, right? I mean, we will launch product next year. So the basic idea is that revenue should be matched with cost. Whatever, when you will get the benefit, you should charge the cost. Whatever is happening with accounting is something different. Don't get confused. We are just talking with respect to performance measurement, right? And where's my cursor? Okay. Then if there is a research and development expense, so if you are deducting, if you have deducted a research and development expense, then we believe that research and development is extremely important. So you have to add it back and you have to deduct its amortization, right? So if there is advertisement expenditure which is not meeting the accounting standard, you have to add it back and charge the amortization, right? And provisions are not allowed, right? Provisions are, because we believe that if you want to improve the profits, you simply increase the provision, right? So provision, increase in provision or decrease in provision, both can be used to manipulate the result. So if there is increase in profit, increase in provision, that is generally charged as an expense, so you have to deduct it. If there is a decrease in profit, that is generally charged as an income, so you have to deduct it, right? I think I said correctly. If there is an increase in provision, that is charged as an expense, so you have to add it. If there is a decrease in provisions, you have to deduct it, right? Non-cash expense, if there's a non-cash expense, you have to add it back. Amortization is there, you have to add it back because you don't believe in amortization. And if there is an interest income, that should be added back with net of interest, because interest is something which we take care in weighted average cost of capital calculation, right? Now, how you will adjust the balance sheet, it's quite interesting because this is where students generally make the mistakes, right? So you have to keep in mind that we generally starts from the opening capital employed. This is extremely important. So if you are starting with opening capital employed, that means whatever adjustment you are making, you have to keep in mind that those adjustments should be related to last year, not this year, right? So you have to add back operating lease expense, right? Operating lease is basically we are trying to capitalize. So whatever net book value of that asset, you have to add it back. Accumulated provision, this is prior period adjustment because we have already charged some provisions in last year. We have to add it back. Advertisement expense, if there is any advertisement expense that is going to have a long-term benefit, you have to add it back. Research and development will be added back. I mean, if something is here which is going to have a long-term benefit and you think that it's going to impact the performance, its benefit will come in the next year, you have to add it back. Non-cash expenses also are prior period adjustment, so this will also be added back. So this will give you capital employed. This will give you an adjustment capital employed, and then what you have to do, you have to this profit and uh, take this profit and then deduct uh, weighted average cost of capital multiplied by this capital employed in order to get the economic value added. So any questions with respect to economic value added, because this is a tricky calculation. So if you have any questions, you can ask.
Yeah, can you explain economic depreciation again? I
Okay.
didn't get it when you did.
Okay, so the next point, which is with respect to uh, responsibility center, is transfer pricing. There's something which is very important with respect to transfer pricing, and this can be asked with you, or maybe you have to deal with it with respect to the scenario that whatever transfer pricing you are using should have a goal congruence. Like you should not set a transfer price which will hamper the overall performance of the company. That should be transfer price should be fair to those who are dealing with it. Like suppose there are two divisional managers, one is buyer and one is seller. So transfer price should be set in a manner that uh, both both will have an incentive to do the transaction. Like suppose if buyer is if let's suppose I'm the manager, I'm manufacturing a product. Let's suppose I am manufacturing a bottle cover, right? And I have to sell it to another division. So if I'm manufacturing that bottle cover at 10 rupees, and so the other division should buy for any price which is more than $10, 10 rupees, right? In that case only I will be motivated. Right? So fairness is extremely important.
Excuse me, Zai.
Autonomy is important. If you are not if you have not given autonomy to the managers, transfer price will not serve the purpose, right? And then overall it should minimize the global tax liability. Now this is important in this part because if you are dealing with a multinational situation, a multinational company is dealing with a situation where you are manufacturing some component in Pakistan and you are selling it to some other region, and you are just trying to make the transfer. In that case, you have to make sure that the region where taxes are high, you are supposed to park the less profits there in order to in order to maximize the overall tax liability. So that's extremely important to minimize the overall tax liability. Now, if an organization is dealing with Yes. Anyone wants to ask anything?
Yeah, we've been putting messages in the chat. Navnita had a question.
Okay, I thought someone raised the hands. Okay.
Hello.
Okay, so these are the factors which are extremely important whenever you are trying to whenever you are dealing with multinational situation. So exchange rate fluctuations, tax rate, import tariff, exchange control, anti-dumping legislation, competitive pressures. Actually, you just need to unmute yourself and ask the question because I am dealing with two different gadgets. I cannot. I'm unable to see it. What you guys are needing
You
with?
can't hear us. We've been asking questions. You can't hear us?
My speaker is not working. Now can you please?
Can you hear us now?
Can you please say now?
Yeah, can you hear us?
Yes.
Hello.
Oh, yeah.
Yeah, I had a question with TV only. Can you hear me now?
Yes.
Yeah, I can you explain economic depreciation again?
Yeah. Just a second. I'm just trying to connect it from my Bluetooth. See, the problem is that these IT things are quite stupid sometimes. Oh, sorry. Okay. Let me try to connect it. Just forget about this stupid IT thing. Okay, so economic depreciation actually means the real wear and tear in your asset. Like, for example, basically we are talking about the net book value, right? For example, let's suppose that we are talking about a laptop, right? So what depreciation does is in depreciation expense, we actually try to have a depreciation policy and we act accordingly, like 20% depreciation or 10% depreciation, whatever the method is. But and when we go in the market and we try to sell the laptop sell at a different price because and there will be a gain or loss on disposal. This is the general practice, right? But we say that okay, fine, that means whatever depreciation you are charging is not in line with the with what is happening in the market, right? So we say that your so in that case your assets can be undervalued or overvalued. So what we believe is that what you are supposed to do is you need to measure what is the value of asset in the market. And let's suppose last year the value of asset was around 400,000, and now when you realize calculated the realizable value, it's not 400,000, it's 320,000. So the economic depreciation will be 80,000, right? Next year, when you calculated, did the perform the same analysis, you got to know that now the value of asset is not 320,000, it's 300,000. So now the economic depreciation will be just 20,000. So that's basically the idea behind it, that whatever assets you are including in your balance sheet should be closer to its market value.
Okay, thank you.
Okay. Any other question?
Yeah, I had a question with regards to the non-cash expense and other adjustments, especially when you're using that opening balance date. You try to explain the two dates, the 31st of, let's say, year end and the 1st of a year end. So in the economic profit, we add back the non-cash expense. But there was an example I was working where in the current year, you wouldn't add it back into the capital employed, you'd put it in the next year. Could you just explain that? Because I think I'm struggling with the capital employed part, especially when there's 2 years involved, because sometimes you're adding things into the current year, sometimes you add things into the future year. I know it depends on the question, but if you just please re-explain the dates, the opening balances and what you include in what year, because it's a bit tricky to understand.
Don't worry. It's tricky for a lot of people. It's not just you. Okay, let's suppose, I hope you can see this Excel screen. Let's suppose we are in 2022, right? And let's write 2023, let's write 2024, right? And let's suppose the non-cash expense was around, non-cash expense was around 10,000, was 10,000 in 2022. 12,000 in 2023 and 8,000 in 2024, right? Suppose this is the situation, right? So when we are dealing with profit and loss account, right? When we are dealing with profit and loss account. So in profit and loss account, we will adjust 10,000 here. We will add back 12,000 and we will add back 8,000 in all the years, right? So I think this part is pretty okay with you, right? But when we are dealing with the capital employed, when we are dealing with capital employed, the problem is that we use opening capital employed, opening original capital employed. Now, this term original is quite important because we are not using the capital employed of last year. I mean, let's suppose, okay, fine, let me give you an example. Let's say that we have started our business in 2022, let's suppose. I'm not sure if this example will work. So the original capital employed is 1 lakh, right? Opening capital employed is 1 lakh. Let's suppose we started business last year. And so what we will do is, since we have already, okay, since we have already added this 10,000 in 2022 balance sheet, we are not going to do any adjustment in this part of the balance sheet. So we will keep it as it is. We will not adjust anything here. Okay. Now let's suppose in the second year, the capital employed, original capital employed, which we are taking from the original balance sheet, right? Because obviously in 2022, in 2023, we must have added some assets, we must have deleted some assets from the balance sheet. So the closing capital employed of 2022, closing capital employed of 2022 is, let's suppose, 130,000, right? This 130,000 is actually what? Try to keep this thing in your mind. This 130,000 is the opening capital employed of 2023. And this is the closing capital employed of 2022. That means we are standing at the beginning of 2023. Okay. So what we will do here, because this is the original capital, and we in the last year we have already charged this 10,000 in the P&L. So what we have to do, we have to adjust this 10,000 here as well, because this is the prior period adjustment. Because in this 1,30,000, because see, what is capital employed? Capital employed is a sum of share capital, reserves, and long-term liabilities, right? And share capital, reserves, and long-term liabilities. Long-term liabilities also includes the retained earning, right? So the retained earning, which is, I hope you are with me, the retained earning, which is in this 130,000, belongs to the last year. And this is the original one. So technically, last year profit has a wrong deduction of 10,000. So we will adjust this 10,000 here as a prior period adjustment. Right? So we will adjust 10,000 here and we will add it, right? Similarly, in 20x4, since we are considering the original capital employed, and let's suppose that is 80,000, we did quite bad in 2023, in the last years. So this 80,000 is representing the opening capital of 2023. And by the time we are here, we have already wrongly deducted these two things, right? So what we are going to do is we are going to adjust 10,000 and 12,000 both here. So it's a very bad color choice. So what we will adjust here, we will adjust 22,000. Now you can ask me any question.
So why why are we adjusting 22 instead of just the 12? We've already, is it like an accumulation? Because we've already
Yes,
done
because
there. Why are
okay.
we not just doing the 12 in 2024? And
Yeah.
in fact, I actually wanted to ask why we're not doing the 12 in the current year, 2023, because we're in that year.
Because we are using the original capital employed. Original capital employed is the capital which we are taking from the company's balance sheet,
Right.
and company has not done this in its balance sheet.
Right. Okay.
So that's why we have to adjust everything, because we believe that this should be the part of balance sheet. Accounting standards has not allowed us to do this.
Okay. I think I understand it. Thank you.
Don't worry, you are not you are not alone in this league. There are so many people who struggle in this part.
No, I know what to do in the
Because
exam now.
no, no, see what the problem is, from day one what we have studied is that what is the closing capital is supposed to be the opening capital. So when we are saying opening capital here, students pick the same concept, and he said, look, this is the opening capital, we have already adjusted this figure before, so why we are adjusting this thing again? Why we are not adjusting the only incremental part? And that makes sense because this is something which we have studied from day one. But the point which is important here is that we are using the original balance sheet of company, and company has not done any adjustment of the sort. So we have to adjust everything which has been done in past. That's basically the problem. Is there
Ma'am,
any?
I get, yeah, I
Yeah.
had a question.
Yes.
So the questions I've solved related to EVA till now is mainly us calculating the NOPAT, and after that the capital employed is already given, so we just multiply that by the percentage given for WACC, and then we
Hmm.
just deduct it from that. So you think something like this will come in exam for us to perform this much calculation?
This is, as I said, try to do archive question. There are 3 to 4 times examiner has given you. There was another question, butter chicken nahi, what, some iron chicken, sorry, butter chicken is something else. Iron chicken, there was a question where examiner has given you a wrong calculation of EVA, and examiner asked you to correct the mistake, something was there. So 2 questions I clearly remember. The third question is related to the past article, examination article, which was quite good question, right? And there are probably there will be 1 or 2 more questions. So this type of adjustments will, I mean, this is among very few topics where the whole question can be, sort of calculation related question, if it makes sense. I mean, calculations will be the properly the part of your question, not just 2% increase or dividing or multiplying, right? And when you are doing economic value added, thank God you asked me. While you are doing economic value added, just keep one thing in your mind. Generally, it's not required in the question. Examiner don't ask you to do that, but try to explain the reason behind why you are adjusting anything. Just maybe just one liner if examiner has not explicitly asked you to do so. But if you have any sort of assumption, or I mean, it's good to write just one liner in maybe with respect to each adjustment, not the typical adjustment, but if there is any specific adjustment, Just write 1 or 2 liner in there in that. So this can be around 15 marks question easily. Don't worry about that. Okay.
Yes, ma'am.
So okay, so where we were? Sorry, actually, I don't know. So after this, we will take a break. After doing this, so predicting and preventing corporate failure. This is something which is which examiner. I mean, there was an article of predicting and preventing corporate failure in past, and that is a good article. But I think you should read that article and understand if you have current examples like what happened with Nokia, like what happened with Kodak, like what happened with BlackBerry. You have so many examples like what happened in that Bhopal chemical, that environmental thing. So whatever, I mean, the things which have happened in past, you can easily relate to those examples, right? So what I believe is that the first thing which examiner may ask you to perform is the Z score, right? Now Z score, you don't have to memorize Z score because Z score is like a statistical model. It will be different for different industry. It depends upon the risk of industry. So you're not supposed to memorize anything. There will be a formula which will be given in the question, and you're just supposed to do 5 or 6 marks calculation with that. The important thing is that why which factor is actually contributing more to Z score. That's more important, right? And then there's Argentines A score, where examiner has identified multiple areas which can lead to, which can be, sort of some small issues, some bigger issues, and some biggest issues, right? For example, if you don't have, if you have weak cash flows, if your management is unable to control the cost, or if there's autocratic chief executive, or there are so many things where which may lead to a corporate failure, right? So you just need to read that article. It's very good article. Just read that article. You can connect it with the companies, and probably you need to identify the reasons why the company may face any corporate failure, right? So let's try to have a break of 5 minutes, and then we will discuss costing method, or shall we continue? Up to you.
Uh, 5 minutes break would be good.
Okay, let's take 5 minutes break. It's 10:38 here, so we will resume at 10:43. Thank you. Okay, so we are resuming. Costing methods. This is purely something which can be examined in 25 marks session, a 25 marks question, because mostly it's 25 marks. So activity-based management, activity-based costing, and activity-based budgeting. These are three areas which can be asked in exam. Okay. So activity-based costing, activity-based management, activity-based budgeting. Activity-based costing is something which we know already. Activity-based management has two areas. The first area is to identify is activity-based management at strategic level, and the second area is activity-based management at operational level. So at a strategic level, we try to identify which products are profitable, which products are not profitable, value added products, non value added products, value added customers, non value added customers. So mostly that's at the strategic level. But if you're trying to identify, apply activity based management at operational level, in that case, it's value added activities and non value added activities. Can you please can anyone explain the difference between value added activity and non value added activity? Because that's the core of ABM, and that can be the core of target costing and so many topics.
Value added activities are which affect the customer, like the quality of the product and all of that, and non value added are like which doesn't directly affect, and if the customer doesn't care about if it's being done or not, which is like extra storage space and all of that, I think.
Yes. If you're talking, if anything is adding value, let's suppose if you're talking about an extremely good store department, it has nothing to do with the customer, right? So customer will not give any importance if you have a good store department or not, right? For him, it's extremely important that your product should be good in terms of quality. So if anything is improving the quality, maybe its size, maybe its color, maybe its quality, maybe its packing, it's going to add value to the product, right? So, an activity-based budgeting is typically a budget which is based on activity-based concept, right? So, quality management system is something which is going to improve the quality, right? We are trying to have a system that is going to improve the quality and reduce the overall cost, right? So, and customer satisfaction, see, the important point in quality is that quality is quite subjective. If I'm saying that the quality of a product is low, it depends how much price I'm paying. So quality is actually determined by the prices which the customer is paying, right? So there are a few topics which are related to quality practices. The first one is Six Sigma, then Kaizen cost. Kaizen costing is mostly costing related. I don't know why Kaplan has included in quality practices, but it's something which I have taken from Kaplan. Then target costing, it's also a cost-based costing related thing. I mean, we are trying to reduce our cost, maintain our cost, in fact, reduce and manage our cost, right? G, Navita. Sorry. Yes, Navita.
Ma'am, with the Kaizen costing and target costing, Kaizen costing aims for cost reduction and target
Yes.
costing aims for cost control, right?
Yes. See,
So,
carry
yeah.
on.
No, my question was, so target costing comes under the standard approach?
Target costing is actually, that's what I'm saying, that Kaizen costing and target, the objective of Kaizen and target costing is not to improve quality. Maybe you can deal it with this part of this thing, the second, the first part, that minimize the overall quality cost. So if you want to improve, reduce the uh, cost of the product without compromising on the quality, maybe you can deal with it. But if someone asks me that what is the basic objective of target costing, I will say its basic objective is to introduce a product within the cost limit. That's the most important thing. But yes, you can, some sort of mm, what you can say, you can redraft this approach in such a manner that you can, somehow connect it with the quality, that okay, fine, if you want to go for value engineering approach. Value engineering approach, it means that you are making sure that you are keeping the quality of the product intact along with reducing the quality. I find a very good example which I have seen recent times is, we were working in a situation when there was a company who has introduced a product. I won't take the name. So they were trying to reduce the cost, and the cap which they were using was of a high cost cap, right? So what we, after some analysis, what we finally conclude is that you should that the company product quality is not going to improve by the quality of cap. So you can use a standard cap. You are not supposed to use any customized things, right? So this is basically the objective of target costing, but to keep it within the limit, within the cost limit. So maybe you can say that, okay, fine, we are not compromising on the quality and we are trying to reduce it. In that perspective, we can connect it with here. So something which can be written in exam, if there's a sort of interaction between Kaizen costing and quality practices, you can deal with it. Okay, so the first one is TQM. This is something which we already know. Prevention cost, appraisal cost, internal failure, and external failure. Any issue with that? So I can explain, otherwise we will proceed. Prevention cost is the cost of preventing the losses. Appraisal cost is the cost of checking the product, like inspection, quality inspection. Internal failure cost. This is not appraisal cost. This is failure cost. Internal failure cost is a cost which is, let me try to connect it here. Internal failure cost is a cost which, well, let's suppose we identified a flaw in a product, and before selling it to the customer, and we are trying to rework on that. That is the internal failure that happened before selling it to the customer. But if that failure happened after selling it to the customer, then then it will not be a reworking, it will be a warranty cost. It will be, maybe the customer will reject the product, or maybe he will claim a warranty. So that will come under that heading. And obviously external failure cost is the scariest part, because um, that is something where you are exposing the bad quality of the product. And at the end, there are two statements written: conformance cost and non-conformance cost. Conformance cost is basically the first two part. Anything which you spend in order to reduce the quality of cost, that comes under to improve the quality and reduce the cost, that comes under the heading of prevention cost. But if you fail to do that, if you don't do that, ultimately you have to be at the non-conformance cost, right? So Six Sigma is basically a concept where we say that we don't want to have any failure, any bad product. It should be, I think it's around 3 in a million transaction. We are trying to target that 3 errors out of a million is some sort of Six Sigma. So how we are going to implement Six Sigma concept? It's quite not subjective. I mean, it's simple. That first of all, we have to define a problem. What is a problem? Then we have to measure the intensity of the problem. That how much, what the problem is. Let's suppose we are saying that, okay, fine, the customers are unable to get the product on time. This is the problem which we are facing. So we have to measure how much late. Is the product arriving 1 day late, 2 day late, a week late, or never? It's not arriving it at all. So that's basically the intensity. Then we have to analyze the reason why this is so, because it can be because of the wrong setting of a standard. It can be because of anything. Then you have to deal with the problem. Then you have to improve it, try to improve it, and then you have to see whether the steps was enough. I mean, you have to measure it. So that comes under the heading of control part, right? Kaizen costing, as I said before, Kaizen costing is a technique which we use to, because there's a difference between Kaizen costing and variance analysis, the standard costing, because Kaizen costing is supposed to be the new concept apart from variance analysis. Let me try to bring you to the heading, which, yeah, this heading. So this is important. Standard costing or Kai versus Kaizen costing. Now, this is something which may be examined in paper because this is important. Kaizen costing is the basic idea of a standard costing concept is mainly deals with the situation where we are saying that we have prepared a standard, and let's suppose there is a standard consumption, there's a standard price, there's standard material, labor, time period. So every we have prepared a standard for everything, right? But what if your product life is just 6 months? What if your product life is just 2 years, right? So it will be difficult for you to set a standard. Or let's suppose if the situation is quite dynamic, the situation is not stable, the situation is quite dynamic. So definitely you have to deal with it accordingly. So standard costing is mostly a cost control system, and Kaizen costing is cost reduction. Now there's a difference between cost control and cost reduction. Cost control is um like suppose you are getting an excessive electricity bill, and you are just trying to control the you are just trying to switch off fans and lights every time you are getting out of the room. But if you are talking about cost reduction, that means you are using energy savers or maybe some inverter techniques. So in order to that's a permanent solution. So Kaizen costing mainly deals with cost reduction part, right? In Kaizen costing, what we do is we try to we try to make some plan how much cost we are going to reduce, and then we try to act accordingly, right? And the basic objective of Kaizen costing is to reduce cost without compromising on the quality of the product, right? um Variances on the other hand are quite different. Variances means that you have to meet the standard. It's not on cost reduction, is to meet the standard, but Kaizen costing can go one step further, right? And what is the connection between Kaizen costing and target costing? Target costing is something which we do before product launch. So if you want to launch a product, you will apply target costing in that case. But when you have already launched the product, after the launch, you will not apply target costing, you will start Kaizen costing. So till product launch, it's target costing. After product launch, it's Kaizen costing. Is there anything would you like to ask? No. Okay. So, yeah, elimination of waste, improvement, it's something simple. Now, lean production is something which has been asked in a question with this part, that what are the 8 criterias of lean production system. So it's the idea is simply to remove the excessive things, right? Overproduction, if you're producing more, that's not going to add value. Closing stock is useless. If you're producing closing stock, that's going to that's actually piling up your taking up the space. Your capital is getting stuck, so you're not supposed to do that unless and until there is a need to do so. Holding or purchasing unnecessary inventory, don't do that. Waiting, production delays, idle time when value is not added to the product. If you are excessive production, unnecessary activities, you are dealing with this thing. Defective product, if you are producing defective product, that is you are just supposed to scrap it as soon as possible. You are supposed to reduce the motion of the inventory or work in progress or finished goods or transportation or anything as much as possible. Poor planning may lead to transportation issue and over processing unnecessary steps to which do not add value. So maybe in a situation, not everything, but maybe in a situation you will see certain things. So what you have to do, you have to make your process more leaner. Like you don't have to. I mean, the basic idea is that your processes should be smooth, and for making your processes smooth, you have to deal with these things, that you have to remove excessive things, and you have to focus on something which is extremely important and which is going to deliver the value to the organization. So it depends upon the scenario, what kind of scenario is given, and you have to deal it accordingly, but these are the general issues. Okay, environmental management accounting. So EMA, there was an article I think I forwarded to few students, which asked me to do so. Environmental management accounting, the basic idea of environmental management accounting is that there is an environment. There are now obviously climate chain. There are a lot of environmental costs which are involved in the businesses. So what we are trying to do, we are trying to manage the environmental cost. That is basically the idea. Environmental management accounting is to manage your cost, manage your environmental cost, mainly, right? So first of all, what is the objective? Objective is to identify and understand environmental costs, because there are a lot of situations where we don't understand the importance of such things. I mean, this is some theory. We can just skip this. Evaluate the environmental benefits, support informed decision. I mean, these are the reasons why we do environmental management accounting. So if we talk about, let's suppose, informed decision making, that means there can be some cost. Like suppose you are doing business where you are supposed to clean up properly, you are supposed to dispose of water after cleaning it, and you have not taken into account, you will suffer the cost, you can suffer some penalty. So that's something which is related to this. Now, environmental related costs, there are four costs which are related to environment. This can be asked in exam. This can, you may, examiner may ask you to club these costs. The first one is contingent cost, like the cost which arise due to unexpected environmental event or incident. Let's suppose there was an accident, or maybe something bad happened because of environmental issues, and you are supposed to pay the cost. That is the environmental cost. Conventional cost is simply the cost of environment, like cost of producing the wastage, and simple routine cost of cleaning, something like that. Relationship cost is the cost related to suppliers, shareholders, employees, how you are dealing with that. And reputational cost is obviously a cost which is related to the reputation of the organization, which may hamper if anything bad about the company comes comes in the news, and maybe you can suffer such reputational issues, right? So these are some description and some problems with traditional ones. So just read it. I will provide you with a record with these slides. Now, there are four things which are actually related to environment and total quality management. So the first one is environmental prevention costs, the costs which are required to which you bear for preventing the environmental problems. Like let's suppose you are using maintaining machinery properly, so you're not actually producing carbon footprint, right? And detection of cost. So if let's suppose you are dealing with a lot of machinery, so you have to analyze every time that how much carbon dioxide you have, carbon footprint you are producing, or gases you are emitting. And let's suppose there's sort of internal failure cost is a cost which of activities which you have identified within the organization, but before passing it to the environment, obviously not to the customer. An external failure is a cost. Let's suppose you have discharged some polluted material in the river, or maybe something, and the government penalize you. That's basically the external failure cost. There are four techniques which are generally used in EMA. The first one is I will start with the last one. I mean, in the calculation of product life cycle, we generally include environmental cost, right? In activity-based costing, we try to identify what are the environmental costs, and we try to identify its cost driver, and you need to identify activity-based recovery rates of environmental related costs, and then include it accordingly in the cost of the production, right? Flow cost accounting is basically to identify positive and negative production, output, wastage, and to report it in the P&L. And inflow outflow analysis means you need to identify how much input you have made and how much output you got. So the difference is obviously the loss which incurred, right? You need to analyze that how much wastage you are producing in every process, so in order to improve that. Benchmarking is something which we already discussed in the last class yesterday, so I can skip this because it's quite simple. In benchmarking, what we do, we identify an organization, we benchmark it, we identify the gaps, we try to sort it out, and we try to fill the gap. So I'm just skipping this because this is something which we just discussed in the last session. Types of benchmarking, yes, we can do this. Internal benchmarking is where we are trying to benchmark the similar two functions of similar company. So the idea is that since the company is same, the information will flow easily. You can get information quite easily. But the problem is that since this is the same company, the improvement chances are quite low. Competitive benchmarking means that you are trying to benchmark with a competitor, which is technically, which is quite not beneficial, because obviously your competitor will not tell you what they are doing. Functional benchmarking is something which we discussed yesterday, that you are trying to identify any other company, let's suppose a credit card company, are trying to identify that how they are managing their accounts payable, account receivable system, and you are trying to implement it. So it's a different industry, but we are trying to benchmark a function. Strategic benchmarking is the way the other companies are dealing with the strategy, whether they are diversifying, whether they are how what is the strategy they are keeping in order to improve. We will try to have the same strategy, right? So generally we go for internal benchmarking and functional benchmarking. League tables. Leagues table is something which examiner has asked recently. I think two times recently. Recently, in the sense, in last 5 or 6 years, examiner has identified, I think, 2 to 3 times this league table. So I think league table is simply if you see a a tournament, then you will see how many marks, how many points each company won. So it's like that, but it's related in terms of KPIs, that how many KPIs were achieved by different companies. So the company which has achieved more KPIs will rank first, and then it's sorted out accordingly. Now, what is the basic idea? What is the advantages? Again, if examiner asks you DIP or DP police, that would DIA police was a question which I mentioned yesterday. DIA is a question. DIA police is a question where in the last part, this league table question was asked. Right. Let me try to show this if I can, so that you can try that. Mm, I hope I can show this to you. Sorry. DP police. I think this was the question. Yes. So this was the question which examiner has asked from students. Now the problem is that this was a 10-mark question, and a very simple idea was asked, that the company wants to do some league table things. They want to adopt league table, and you are supposed to identify therefore he needs to explain how the use of league tables and target might affect the police officer's behavior. So that was asked with respect to behavior. So if you just write the disadvantages or the problems of league table, that's not going to serve the purpose. You have to connect it with the behaviors, right? So what is the good part? Oh, what the good part is that you are trying to make a comparative analysis, right? Let me try if I can have, yes. So the good part is that it stimulates competition. So you are, continuously trying to win the battle. So you are trying to meet the targets. But the problem with this is that if you get so enthusiastic with, becoming, winning the race, in that case, you may just focus on the KPIs which have been identified in the benchmarking process or in this league table. So maybe according to your dynamics, those KPIs are not important, but since the industry is dealing with those KPIs, or maybe the government is dealing with those KPIs, you are keen to just meet those KPIs at any cost, right? So that may be that you are not focusing on the other important areas which are important for your business. Maybe you are trying to do some window dressing. Maybe you are just trying to follow that. So that can be a problem here. Monitors and ensures accountability. So that is a benefit. Yeah, here it is. Yeah. So that monitors and ensures the accountability, that each and every section you can measure, right? Performance is transparent because we are measuring so many areas. So in case someone is doing one thing wrong, maybe the other part can, justify his performance. Consumers to make choice, many different areas of performance summarized into weightage everywhere. This part makes sense. I don't think this You can cut this off. Okay. Now, disadvantages are quite higher compared with the advantages, because dysfunctional decision making, in the sense that if your targets are not aligned, you will ultimately lead up in a bad performance because your targets are not good. This is not the problem of league table. This is basically generally the problem. This is something which is given in the Kaplan text. Only measures relative performance in the sense, I mean, the same thing which I said, that okay, fine, you are just trying to improve those areas which have been listed. Difference between organization make comparison and accountability is different. Let's suppose we are talking about a police of Pakistan with police of UK. Obviously, you cannot make the comparison, right? So police department is same, but the dynamics are quite different. What areas weightings to use in the scoring system to arrive at the ranking? Now, this is important, how much weightage you are giving to one area compared to the other one. Let's suppose we are saying that to us, customer satisfaction is the most important thing. For the other people, maybe employee satisfaction is most important. For the other people, maybe shareholder is given the most weightage. So it depends upon what is trying to do what. So maybe it may hamper the approach, right? Oh, poor ranking, sorry. Poor ranking impacts employees' morale and public trust. I think you can read this in order to, it's not a big deal. I just want to focus on the other areas of this because we are getting closer to BPR. We did. BPR is easy, human resource management reward system. This, yeah, this part. This is something which you can use a lot of time in your answers. And there's something which is given in Shrine Company something. This part. What sorry, it's not complete. This part, what gets measured is get done. Whatever you are measuring, people will do that. What gets measured and we are taking its feedback, that is done well. Because if you are measuring and we know that nothing will be done based on these KPIs, probably we will do it, but not with that motivation. So if you are taking the feedback also, it is going to do well. If it's get rewarded, people will repeat that again and again in order to get the reward. So this is these, I just found these three lines quite interesting in your text, so I just thought to include it because you can use it in your answers anywhere. Now, this is important. This is something which students generally find difficult to match. So if someone is saying that, this is actually related to question number 1, where in the mission statement, somehow examiner says that the company wants to maximize shareholder return, maximize shareholder wealth, maximize shareholder value, maximize shareholder long-term return. So you have to connect it with some things. So if the company wants to, shareholders are generally concerned with current returns, future earnings, dividend policy, relative risk. So if the company is saying that the company wants to maximize its return, generally we go for anything which is related to earning, EPS, something, EPS, ROC, everything. Future earning, maybe we can focus on any indicator which may mean that we will earn a good benefit, maybe economic value added. Dividend policy is dividend growth. Relative risk of their investment, maybe we can use economic value added here as well. Maximizing shareholder wealth is generally related with EVA and the share price, right? How you can reduce the short termism, I think this is also something which has been examined in past somewhere, that how we can make sure that the company is not focusing on the short term target. So the first and the most important thing is you have to use financial and non financial target both, right? You should not you should not tell employees to meet the budget, right? Budget is something different, because uh, if something different happen, you should act accordingly. You are not supposed to meet the budgets only, right? Share option is a good example, because if you give share option to the employees, that's going to improve that, motivate them, because if this is now their company as well, so improvement in the company's performance will improve the profitability, ultimately um, their stake in the company, their wealth. Bonuses, NPV and IRR should be used to compare the investment in order to make sure that we are accepting any project which is generating more return. Reduce decentralization, because if it depends. I'm not completely with this idea, but it depends upon how we are dealing with decentralization. And value based techniques, anything which is adding value to the organization should be preferred. Okay, fine. So value-based management, this is also important. I think maybe for the coming attempt, this can be important. So if you are saying that the company is trying to have value-based management system in operation, that means we are making sure that the company is trying to maximize shareholder value. Shareholder value is maximized when shareholder value is maximized when we are trying to have some policies which will generate long-term benefits, right? So economic value added is something which is related to that. Market value added is simply the addition of the overall economic value added generated. Net present value is NPV of a project. NPV and shareholder value analysis, there's a difference between, I mean, shareholder value analysis is basically the discounted cash flows of the whole company. Now, value-based management. Now, I just want to summarize this. You can read it later. The basic idea of value-based management is that no matter if, I mean, you have to give the autonomy to the managers to make sure that the long-term profit will increase. So if you are investing a lot of money right now, if you are unable to generate profits because of that right now, it doesn't make any difference, because we believe that if it will generate a long-term benefit, then it's beneficial for the company, right? So that is basically the approach. And again, if you want to have a value-based management approach, that thing also has to come from the top. That management, that we have to tell the shareholder that, look, right now the company profits are not good. Maybe for the next 2 years you will not see a good profits. You will not see good profits, but later, when the benefits will start coming to the organization, when these projects will start, probably we will have benefit. Let's take the example of employee training and investment in employees. Let's suppose we want to send our 20 employees for international training, right? And that's going to have a lot of cost. Let's suppose we want them to stay at least 6 months abroad at company expense, and then we will ask them back to come and serve in the organization, maybe 6 months, maybe a year, or maybe 2 years. So after 2 years, the benefit will come to the company. So for 2 years, we have to bear the expense. So if managers are allowed for such things, only then they will have the courage to take those steps. Otherwise, people will just go some regular training, right? Similarly, if you want to excel in research part, you have to give autonomy to the manager, that okay, fine, if you are doing a research and that will not do well, okay, fine, we will tolerate that. But obviously there's a level of tolerance, but you have to give them an idea that no, they will be appreciated if something good comes, right? So this is basically the overall idea of value-based management. Now the disadvantage is that you are giving too much autonomy to the supervisor, to the manager. So maybe they will start spending a lot of money in those projects, which they will get careless. If they know that no one is going to question their efforts, they may get careless. They may start investing in a projects which may not bring that much benefit. So no, there should be a reasonable level of control and reasonable level of autonomy given to the management, right? So that's basically this part. Okay, so any questions till now? And if you are using economic value-based management, you should use economic value added, because that makes sure that the company is generating long-term profitability. And that's why we believe that EVA is a long. If the company wants to maximize shareholder wealth, it should use economic value added, right? And then there are a few models which are quite important in APM. which is SWOT analysis. I'm not going to deal with this because this is something which you guys already know. SWOT analysis, pest analysis, closing and planning, product mix metrics. BCG is quite simple: stakeholder mapping, business integration, Porter 5 forces model, and McKinney's 7S model. So these two models are there: Porter 5 forces model and Porter's generic strategy. So we are going to deal with few topics because mostly you guys know. Anything which you guys don't know, just let me know. Okay, whenever examiner says that there's a product identification, that how we are going to deal with the product. So if you want to analyze a product, you have to see the product. If the product is an existing product, and sorry, if this is if the product, if you are trying to if there's a product which is already in the market and the market exists, then obviously whatever product you are trying to plan is trying to you have to penetrate, you have to adopt a penetrating market policy, right? If we are talking about an existing product and we are trying to introduce in the new market, then you have to develop the market, because the market is not there, people don't know about that product, right? If the product is new, if the new product is there but already some similar sort of product is available, you have to develop the product properly. And if the product is new and the market is new, then definitely you have to go for diversification, right? BCG, Boston Consulting Growth Metrics, it's quite simple. If market growth is, if you are seeing that the industry is improving and you have, it depends upon how much market share you have. So if the industry is growing low, but you have a high market share, that means it's a cash cow. You have a big chunk, you have 50% market share, but you are not seeing industry to grow. That means you have to, take out all the benefits from the market. If your if your market share is high, but your and the product and the market is also improving, then this is a star product because you have a high market and share, and your industry is also improving, so you have to do the maximum investment here, right? If your market share is low but your market is increasing, then you have to decide whether to invest here in order to improve, or whether to not invest because you think that you won't be able to capture the market. And if both things are low, then then the product is dog, you just need to divest from there. Now there is a connection between BCG and life cycle costing. So if the product is at growth stage of the product life cycle, it means that if you see the BCG, it is at the star phase because it's a high market share and high market growth. If the product is at maturity stage means we are selling at the we are selling the maximum quantity, but we are at the peak. Now we are not going to improve further. So that means the market share is quite high, but the growth is not there. So we are quite stagnant at that position. If we this I think examiner asked somewhere in a project that where your project should be. There were 3 or 4 projects. So the ideal combination is that your project should be at multiple stages of the product life cycle. So there should be a project which your product there should be few products which are at cash cow stage. I mean, that should have a maturity phase so that you will be able to generate enough profits, cash flow from that, right? There must be some product which is at a question mark stage, so you are trying to identify whether to invest that money in this part of the business or not. Star is something which is already at a good phase and it's generating profit. So this is something where you have to invest your money, right? So the money which you are getting from cash cow, you need to decide where to invest, right? And then obviously there can be some project. If the project is at dog phase, that means the product is at declining phase, so you just need to withdraw from that project, right? uh, Stakeholder mapping is is important because whenever examiner asks you to identify a strategy for the stakeholder, you have to identify who is the key player in your among your stakeholders. So if the level of interest is high and the power is high, only then you can decide to make strategy for that stakeholder. Otherwise, if the interest is low and the power is high, like the government is generally categorized in this category because government is not interested in your profits, but obviously they are charging tax, they are, you are dealing in the region, so they have a high power. If the organization is a pharmaceutical company, maybe your interest will also be high, government interest. That is something which, I think there was a PT question where examiner asked this thing. Minimal effort, if the interest is low, power is low, minimum effort. If the interest is high, but they don't have power, like employees, they are quite interested, but they don't have power, just keep them informed, right? Don't make strategies accordingly. Or resolving a stakeholder conflict. Now, these are few things which we can use either to discuss things with them and to either to give them reward, either to discuss them and to convince them, either to divert their attention, either to prioritize which one you want to deal with first, with in terms of resolving the stakeholder. So this is something which you can do. Exercise of power is written here, but you must not exercise the power because it's going to further deteriorate the situation. We have seen a lot of times in politics as well. So there are two models. This is the last thing probably which we are going to do. There are two models: business integration model, Porter five forces model, and McKinney 7S model. If you guys are aware of that, we can skip this. I just want to cover the budgeting part. That was important. I think we should move to budgeting because models are something which you must be aware of. Now there are some budgeting techniques which are extremely important. Budget is something which examiner generally asks, so it's important part. Fixed budget. Let me try to give you a basic idea, and then we will try to discuss beyond budgeting and zero-based budgeting because these two are extremely important. Fixed budgeting is that it's not a good type of budget. I mean, we have just made a fixed budget. We are not flexing the budget. We just said, okay, fine, we'll produce itna units and we'll sell itna units. So that's the thing. Flexible budget means we are trying to prepare budget for at multiple activity levels. It's good for planning part. Important is rolling budget. Rolling budget is something like what happened in COVID. We really don't have any clue what will happen in the next 12 months. So the best idea is to prepare budget for on 3-month basis, right? So we can prepare a budget for a quarter, then let's see what happened in the quarter, what will happen in the quarter, and based on those actual information, we can plan for the next quarter. So that's basically the concept of rolling budget, which is generally suitable in a situation when situation is quite dynamic, unpredictable, unexpected, so risk is quite high. So there we generally follow rolling budgets, right? Incremental budget is something where situation is quite stable situation. The company is producing a product which has not uh, prone to any diversification or something. So in that case, I mean situation is not dynamic, so we can just take the last year budget, put a provision on it, and prepare the next year budget. Now, zero based budgeting is something which is important. Zero based budgeting, if you ask any student what is zero based budgeting, the first answer which they give is this is a kind of budget which is so which start from 0 point. That is the best answer which the students will give you. Yeah, that is the correct answer, but zero based budgeting have a lot of other things as well, like how you will prepare a zero based budget. Zero based budget is prepared by identifying the multiple levels of the activities, like for example, what type of level of activity is important. Let's suppose we are talking with respect to a store department. Then do you want to have a basic store department that is need of every organization? Then there is another layer where you keep some extra provision that, okay, fine, if we will have funds, we will have some more facilities in the store department, and then can be other next level, but those extra levels can be the optional level. Same with IT, same with maintenance department, same with canteen department, same with any other activity, right? So that is basically the idea, the basic requirement, and then incremental requirement. And then we see what is the overall how much funds are available overall, and then we try to um, then we try to allocate funds according to the benefits which we are receiving. Like, let's suppose if maintenance department is quite important for the company, then we will give maintenance department money first before allocating any money to canteen department. So that's basically the idea of zero-based budgeting. Important here is that the projects, the departments which are generating most benefits are allocated the funds. If the department is not generating benefit, then probably we will not allocate funds, enough funds, or we will reduce funds to that department. That's basically the idea. Now, what is beyond budgeting? Beyond budgeting is quite simple. Beyond budgeting is actually a criticism on traditional budgeting. It says that when you should not prepare budget for the next 12 months, because you cannot predict next 12 months. Now, beyond budgeting is not suitable in all situations. If your situation is dynamic, if your situation is bit change in a continuously changing environment, not unexpected, your environment is changing, your needs are continuously changing, customer needs generally change. So in that case, generally we can use beyond budgeting, where we don't focus on 5 million profit. We focus on we should generate 30% operating profit, or the profit of this year should be 20% more than the last year, or maybe we should have more sales, we should have etna percent market share. So we generally move towards a relative performance indicators, right? And the another benefit which traditionally budget says that this is a benefit of budgeting is that I tend to identify the limiting factor, because when we prepare budget, we tend to identify which factors will be limited in the coming year, and we focus on those factors, how to manage those factors. So beyond budgeting says no, it's not a good idea, because generally if in January you believe that you will be able to get materials for the whole year, maybe in March you get a surprise that you won't be able to get materials. So you will do something now. So that's basically the beyond budgeting says that it's useless to predict the budget. So they are generally with the fact that you should not focus on purely on budgeting. You should prepare budgets, but your prepare should not be budget should not be based on absolute figures. It should be on the KPI basis. So if you will meet those KPIs, you will ultimately achieve the overall objective. So that's basically the idea of beyond budgeting. But somehow it also has some criticism, because people don't buy this idea a lot. So that's basically something. These are few areas of budgeting. This is something which is also important, budget constraint. This is the last thing, let's consider this. There are three ways of management style: budget constraint approach, profit conscious approach, and non-accounting style approach. This is also quite frequently asked in the examination. So if a company is having budget constraint approach, that means it is following budgets, right? It is purely following budgets. So 5 million profit or 5 million sales, 2 lakh units production, that's something which budget constraint style says, and which is not a good idea in current situations. Profit conscious style says that if an organization is focusing on the long term profitability, in that case, we say, okay, fine, the company is focusing on the profit conscious approach. And non-accounting style approach is something where we don't believe in financial things. We believe more in non-financial areas like customer satisfaction, like quality. So we believe if we improve that, ultimately we'll be able to achieve the objective. So we keep in mind while preparing the budget that we should focus on non-financial perspective more rather than financial perspective. Okay. So I think we covered most of the areas. I think the cloud computing is left, or some IT related things are left, so that you can read. But I try to cover maximum topics which we can, so that you can brush up all those concepts. There's another video which we did, I think, last to last attempt, where we did a recap of, and that's of, I think, 2 hour 2.5 hours, maybe, I'm not sure about it. So you can refer to that as well. But try to cover as many topics as you can. Try to, whatever theory you are writing, try to connect it with the scenario. That's important. And what we discussed in yesterday's, how to write the answer, that is extremely important. Try to embed that in your answer. All right. So in case of any issue, just let me know through any resource. I mean, I'm the part of WhatsApp group, so you can write it to me. Anything, if you really want me to help you out, just let me know. Okay. So I will be, to those who are already registered, I will be uploading mock paper on 20th, hopefully, and we will have a debriefing session of mock on 24th, 25th, probably. Okay. So take care of yourself. Do you have any questions you can ask?
Yeah, I've got a question. And I've got two questions actually. I know you just mentioned cloud computing, but things like big data, data analytics or analysis, is that very key? That's my first question. And then the second one is, other than writing a report, what other formats do we get in section B, please?
Okay, let me get to the second question first. You are supposed to write a report in only in section A, not in section B. So only section A contain report writing. You will not find report writing in section B, right? So that's the first answer. The second one, you said, you asked, I didn't get your point exactly. Are you trying to ask that? Okay,
So-
can you please ask?
Yeah. So for the going back to the first one, so with regards to the report, so if we're not writing reports, what's expected of us in section B? Is there like a format that we need to know? Is it like we just write an answer? What type of writing styles are we expected to know for section B?
Let me check if I have included any. Yeah, this part. Can you see this question? This is actually a question from section B, right?
Mhm.
And where I wrote the answer. So this is the answer which I mean I covered in my regular section. So there is no format. The only thing which you have to take care is to cover the relevant point along with justification.
Okay.
So even there is no heading here. If you can see, there is no even there is no heading. I just separated things in different paragraphs. You may put some headings if the question is asking you to do so. If you think that it will clarify the answer, you can include it, but it's not a format, right? Like
Okay.
in this question, let me try to open this question. Right. So this question says the CEO would like your assessment of how BPR process will change the culture and accounting information. So there are actually two requirements. So here you can put two headings, that the impact of BPR on culture, and the second heading will be BPR, impact of BPR on accounting system. So it will make examiners' life easier.
Right. Okay.
And what about the data analytics which you were asking?
Yeah, I was just because I didn't join yesterday's webinar and I haven't had a chance to listen to it. So I don't know if you covered sort of big data and data analytics and stuff like that. But how key is this area for exam?
See, you are not supposed. Okay, fine. Let me answer. See, you are not supposed to be a computer expert, right? So you should be able to understand that how big data can help in sales, right? Or how big data can help you in order to identify the patterns, right? But technical knowledge is not required, because you are not supposed to be someone who is technically sound in doing the big data thing, right? So you have to see how it's going to impact the organization, right? For example, if we are saying that data, let's suppose that sales are low, right? And we are saying that someone has asked, because we know that data mining can help us in order to identify different unusual patterns, right? How can that improve our sales? That can improve our sales, that can improve our diversification part, that which areas which we should focus, which in which segments, like suppose in which cities we are selling more, which women are buying more product, men are buying more product, which 9 a.m. to 5 p.m. we are selling more product, or maybe and on Saturdays and Sundays we are selling more product. So this is something which is important in decision making. So you will be getting this sort of data, and you should know how to deal with that data, how it's going to help the organization to improve its performance. But how data mining work, how data analytics work, that is something which is not your part. That is something which an IT person is supposed to do. Person will give you the report of data mining, and on the basis of that report, you are supposed to take the decisions. Let me show you another question. There is a question, Sharon warm drinks. Yeah, this is a question. So in this question, there was an extract from, if you can see this screen. Okay, and this part. So if you can see this screen, there was something related to statistics, right? Yeah, this mean score is given, and some sort of standard deviation was given somewhere. I cannot see. Probably I'm blind enough for this. Yeah, this part. So mean score is here and standard deviation is there. So you are not supposed to calculate it. That has been calculated by someone, maybe system, maybe someone else has given you. Now, what is your role here is to identify if the deviation is quite high, how it's going to impact. Because deviation, I'm not sure if you are aware of that. Deviation means that if I'm saying if I'm saying that the mean score is 50 marks, average score is 50 marks. 50, there are chances that one student got 51 and another student got 49, so the mean value is 50.
Mhm.
The deviation is quite low, your data is not dispersed. But
Mhm.
it can also, 50 can also be one got 100 and another got 0. In that case you will also get 50 mean. But whatever decision you will make is not good enough, because one is extremely good and one is extremely bad. So deviation actually measures that. So how deviation is going to impact the decision, that's something where your role comes in. So you should have the basic knowledge of that, how it's going to impact. How we have calculated the standard deviation, that is none of your business. You are not supposed to, no one will ask you to calculate the standard deviation, because you are not the right person to ask for that.
Okay, thank you.
Is there anything would you like to ask?
No, I'm good. Thank you.
Okay. Is there any question from anyone else?
Hi.
Hi.
Actually, I'll give you a mail. I'll share your mail. Can you just share these documents to me? I'm
If
so
you
sorry,
send
the
me an email, I'm not
PDF.
sure. I didn't get
No,
any
I
email.
didn't yet, but I'm going to share like in 10 minutes after the call ends.
So what is your question exactly?
Will you please share that the PPT file which you are explaining right now?
Yeah, sure. I will share that. What I have, what I will do with that, I will definitely, that's mean to be shared.
Okay, that's
So this is my email address. See, the next coming 2 days are extremely important, busy for me. Till 20th probably. So if you probably, I will do that. I will for sure do that. If you can do it within 5 minutes, I will do that for sure.
Sorry, when you email the link for today's webinar, are we going to be able to access all the different slides, even some of the ones that you haven't gone through? Or can you send a link to the drive where we can get access to the PDFs and the documents that you were presenting?
I think it's a good idea. This idea is good. I will, but in that case, I have to keep the access open, right? Are you in the on the WhatsApp group? So
Yeah.
no, I just do one thing. Just share your what's your name? Michelle. Am
Yeah.
I pronouncing it correct? Okay.
Yeah.
So
It's to
Michelle,
check
just do one
the
session.
group.
Yeah, sorry. I'm very bad in pronouncing names. So
Yes.
just write an email with reference to webinar of September 2024, and as a response, I will send you the relevant materials. I will send you what we did yesterday, link, this PPT, and another video which I've recorded before. So I will give you a link of everything. Okay, so don't worry.
Thank you.
Have a nice day. Not day, it's almost midway night, so have a sound sleep. Probably it's a good thing to say last wish as a okay. So
Thank you
take
so much.
care.
You too.
Thank you.
Thank
Take
you.
care. Bye bye.
Bye bye.
Bye.